Well, welcome back to Lim's Cryptoverse. So today we're going to talk about Tesla, and I've done many slides, I should say, presentations on Tesla, and I've written about it on Seeking Alpha and some other places. So what I'm going to talk to you today is about Tesla Energy, just Tesla Energy alone. But of course, you can't just talk about it alone because the car company part of Tesla is really the nuts and bolts of Tesla right now. So Tesla's all over the news. Let me go to the next slide. So let's get started. So it's all over the news because, and you can see here on the left side, there's a lot of people that are bearish. People start to short it en masse, almost like what they did with GameStop on the upside with the gamma trade and call options. So there's a lot of risk with what's Elon Musk is saying politically and in Germany, what's going on with Doge, and I don't mean Dogecoin, I mean Department of Government Efficiency. People hate Elon Musk for what he's doing. They're burning cars at dealerships, especially Cybertrucks, because I guess Cybertrucks are more MAGA looking than Model Ys. I don't know. And deliveries are falling off the cliff, and you could see this, for example. What I've got here is a headline from Europe. Tesla sales are falling off a cliff, including Germany, Australia, and China, and also France. They didn't mention that. And I just saw in today's news, February registration data came out, and overall for Europe, Tesla sales are down 50%. Now that is huge. Not only that, but car sales are rising. Electric car sales are rising in Europe. So that means Tesla is rapidly losing market share. So they're not just doing poorly because no one's buying electric cars. No one's buying Tesla's cars. Now, there's a lot of FUD around this. Some people saying that cars are not being bought because of Elon Musk's rantics in politics. But some other people are saying that consumers, potential buyers, are waiting for the new Model Y refresh. I don't know. But to me, it seems like deliveries and sales, unit sales, are declining fast. So here are my projections. I have a whole Tesla model, which includes a discounted cash flow model. You can look at that video. But one important thing is that car sales are declining rapidly. And this is quarterly car sales as presented by Y charts. So I didn't have to input all this. But what I did have to do is try and figure out where the car sales are going for the next quarter. When I say next quarter, I mean the quarter ended March 2025. So about when I'm releasing this video. And if you look at that red line on the bottom there, that's how low potentially unit deliveries can be of Tesla, of the Tesla cars. Now, the Tesla deliveries are going to be publicized on April Fool's Day, April 1st. So before Tesla even releases its first quarter earnings, it's going to release its first quarter deliveries number. So this is coming out really soon. And it's very possible, I might even say probable, that even though Tesla's stock has gone down, has had a drawdown, meaning from its high to low, 50%, it's possible it could keep going even lower because delivery is going to be the worst since 2022, as you can see in this chart. So I meant to tell you, I forgot to tell you, I'm going to be talking fast. And this video is made for you to stop it and look at it and read it because there's a lot to present. And I want to try and get it done in 15 minutes because it's very hard to upload these videos. So what's Tesla's industry position? So they've had until recently a very strong, I would argue, the best industry position, I should say leading position within that industry or industry structure as presented by Michael Porter, who's from Harvard Business School. He did a whole series and lecture and book on industry analysis, which I had in my previous presentations. I'm not going to go over it, but I'm just going to say that historically, Tesla was considered, and it still is actually, the lowest cost EV producer. The new entrants are weak. They have no money. When I say new entrants, new electric vehicle companies, it's vertically integrated, unlike Unlike Ford Motor, for example, General Motors, they've outsourced to all these suppliers all over the world. There's low threats of entry, lots of things going on. And legacy companies, especially like Ford and General Motors, these car companies have especially been very start-stop with EVs, meaning they try EVs, they get bullish on it, like, oh, I'm going to convert my whole fleet to EVs in 3 years, and then they stop that. And even the ones that are not stopping producing or meeting those goals, they're losing a lot of money in their existing platform. And a good example is Ford. They've got that Ford, what's it called, E-Mach or something, or E-Mustang. They publicize how much they lose producing that electric vehicle. It is a huge amount of money. And I don't need to tell you that Lucid is losing money, Polestar, and of course, Rivian is losing a ton of money producing cars. But I said to you that Tesla's industry structure, I shouldn't say industry structure, its position within an industry is weak, is getting weaker because of Chinese producers, especially BYD and even the mobile company, the mobile phone company. I think you pronounce it Xiaomi. It sounds like Xiaomi. Basically, they're doing a great job making cars now. But BYD is really leading. They've got 5-minute charging that they just introduced in March and ADAS level 2 plus. So I did a deep dive into this. I couldn't believe it. But apparently they spent tons of money and had tons of engineers working on this for 7 years. So it's not simple. I thought it was simple ADAS level 2, meaning it's like glorified cruise control. It's not. They're working on fairly high level ADAS, and ADAS is just the level of autonomous. So this level is so advanced, it is said to be, well, there's 3 levels they're giving clients. It's said that the most advanced, most expensive version of this autonomous is as good or better than Tesla. I don't know. I don't think it's been released yet, but I've got to see this to believe it because BYD cars are so cheap. And if you look here, this just came out from Bloomberg. Bloomberg is showing, this is revenues, I think. Yeah. That not only are unit sales doing well, that's happened historically. BYD also sells hybrids. So then they historically had done really well and surpassed Tesla in terms of unit sales, but not revenues. Now, if you look at this Bloomberg chart, BYD is going like this. It's phenomenal. And if you leave the United States and you go to Asia, you see BYDs all over the place, and they're supposed to be really well-built, good-looking cars. I don't know, but that's definitely a risk for Tesla. Okay, let me get faster here. Oh, before I start, I want to tell you that Tesla's stock is up recently because ARK Invest, Kathy Wood, as you know, she's been promoting Tesla again. I don't know how she does this, but she's like predicting a $2,600, still even now, a $2,600 stock price within 5 years for Tesla, despite what's going on now. So my point is you cannot rely on ARK Invest / Kathy Woods and the people that work with her, her research analysts. You cannot rely on them for Tesla models because I think they're just outrageous. And I looked at their robotaxi / Tesla model. It just does not make sense. So since this presentation is on Tesla Energy, let's just focus on Tesla Energy. So if you read this, it says here that by 2029, they're looking for 850 gigawatt hours and in total gigawatt storage. Now, that is amazingly high. It is crazy high. And this is prior, remember, this presentation that they did was over a year ago. So it was released prior to the success and acceleration of Tesla's storage business. So if they did today, it would probably not be 850 gigawatt hours. It would probably be 950 or even higher. Now, if you look on the right-hand side here, I said that I have 163 gigawatt hours of storage by 2029. That's in my forecast. So that is a huge, huge difference. So I just don't trust Kathy Wood and ARK Invest projections. I like how they think, and I like to look at their data and models as a framework, but then I adjust them. All right, let's get going. Time's running out. All right, here I talk about time is ticking. So Tesla is between two growth waves. As you know, Tesla is the first, perhaps global first pure EV car company to like ramp up production like crazy. So you can't look at kit car companies or limited electric car companies. I'm talking about mass producer. Tesla came out of the gate running. Maybe not running because they had kind of like a kit car. If you remember, the first year there was that Roadster, but then boom, like the sales just ramped up. But then what happened, starting, I'm not sure exactly when, I think it was the third quarter of 2024, there was a lot of stuff going on. I'm not going to talk to you about it because this is about Tesla Energy. But basically, consumers started getting range anxiety, things like that. Like, they started worrying about electric vehicles, and the legacy car companies like General Motors and Ford were pushing hybrid. So what consumers did is they pivoted from EVs to hybrid, even gas cars. And this is surprising to me because it looked like, if you can see my hand, like we were going up, up, up. And what happens is you get like a pivot point where there's a point of no return. You get this hockey stick of a consumer adoption. So I thought that an EV adoption starting in 2024 was going to go parabolic, but it got halted in its tracks. So that was really unbelievable. And not only that, Tesla is losing market share, so they're really behind. So they started suffering in mid-2024 until now, and it's just accelerating. It's getting worse. So again, that's why I said we're caught between two growth cycles. We've got the past, the net down, low growth, low revenues now, 2025. And then beginning around 2026, we're going to see that re-acceleration because of FSD, meaning full self-driving, robotaxi, and of course, energy. And if you look at this chart here, this is from Bloomberg. I use this chart as one of my forecasts to make my projections of Tesla's storage. And so this is global energy storage installations, and this is exactly what Tesla's storage business does. So in a minute or two, I'm going to start talking about my model. So here, let me just introduce Tesla Energy. So Tesla Energy, pay attention. Because it's a lot. I've got a lot to say here. I'm losing my voice. So Tesla Energy has two main areas. You got Tesla Generation and Tesla Storage. So Tesla Generation is solar panels, which is typical what you see on the roof of a house. And they have solar roofs, which you never see. I've never seen one. They're very expensive roof tiles. So they're really good looking. And I'm going to show you on the next page, I believe, what they look like. And then they have a storage unit. That's a second unit within energy. And that's the consumer power wall and the Megapacks. So the Megapacks are where the honeypot is. That's where they make their bread and butter. Again, so this is the introduction. So number one, Tesla Energy, section 1, generation is mostly residential and includes solar roofs, like you see in the foreground here with the Tesla, and includes solar panels, which is what you see here. That's a commercial site. Now, let me show you my model. You could stop this and print this, but I've given you some of the consulting data that I've used to make these projections. For example, Berkeley Labs has average selling prices declining at a certain rate, and I've used that decline in price in my forecast where it says ASP. You can see ASPs go down from 330 to 320 and then down to 290 per kilowatt. And just remember, this number is a little higher than you're going to see from other analysts, if you look at other analyst reports, because what I'm doing is I'm blending the average selling price of the solar roof plus the solar panels, which are much cheaper. And then I've got energy generation, the first line here. You could see it's rising, but much slower than I had it before, because I'm seeing multiple reasons why it's going to grow slower. Stuff going on with Trump. We may lose incentives. What else? There's issues with pricing. And then I even went into Tesla's 10K and 10Q, and Tesla itself is having issues with demand, because I could see on its balance sheet they've got lower data points for the solar business, the solar generation business in the balance sheet if you look at the footnotes. So if you combine all that, you can see their revenue in the bottom line here for energy generation grows from 773, that's million, to 1.3 billion. So we're talking about a very small amount. Remember, Tesla's overall revenues, the corporate revenues, are over $100 billion. So this is a very small part of Tesla. So I'm not going to spend too much time on it. Next, this is the area where the bread and butter is. Part two of that energy business is storage. And this is mostly huge utility grade commercial modular. So I'm using a lot of words, but there's a lot to say here. So the utility grades, meaning they're used by utilities. They're modular because you can put them together. And I'm not going to talk to you about this, but there's a huge software component too, to make it efficient, to make it work well with solar panels, windmills, thermal generation. Like you can have all this working together. I didn't include a chart here, but I had a chart somewhere else that included one of my write-ups that showed the ups and downs of the daily production of power. So when you're using renewables, I don't need to tell you, for the most part, you get a daily peak and trough, because obviously with solar, there's more sun in the daytime than at night. So you get energy production peaking during the day, right? So what you do is you have to store all that excess energy with these batteries to be re-released at night. In order to make my Excel projection model going out 15 years or so, I looked at many data factors. I already mentioned one from Bloomberg, the total gigawatt hours that's projected. And what I did here is I looked historically at what exactly were Tesla's energy storage deployments since 2018, and you can see they're accelerating. I'm not going to talk about it. I didn't put any slides forward, but I should just maybe mention it, that Tesla had one factory. The factories that produce the Megapacks are called megafactories. They only had one out in California. Now they've got one in China, and they're building one near Houston, Texas. So we're going to have three. And by next year, we should be, or maybe the year after, I'm not sure exactly when, each factory can produce 40 plus gigawatt hours of power. So three factories could produce 120 gigawatts of power. So maybe by next year, we can produce 100 gigawatts of power. And of course, you need to know that if you're making projections, right? Because if you only have one factory producing 40 gigawatts of power per year of Megapacks, there's no way you can have over 40 gigawatts of power produced in your Excel projections, right? So everything needs to sync together, including the capital expenditures that you show in your discounted cash flow. Okay, next. So speaking of models, this is my model for storage. And in the last line, I include everything together. So I've got energy storage, and we just discussed this, megawatts going from 48 gigawatt hours all the way up to 162, which means, if you remember, I'd said you could produce about 40 gigawatts of power per factory. So if we're going to have 163 gigawatts of power, you need at least, or probably 4 factories, right? I'm sure by 2029, the factory is going to produce more than 40 gigawatts. But just to keep things simple, 40 gigawatts per factory times 4, right? 160 gigawatts. And you can see the growth, which I'm very confident of that because I looked at Bloomberg and other data. And average selling prices, like I'm going to show you on the next page. This is based on consultants and brokers and other providers of information. I'm going to show you one of them from Morgan Stanley. But let's just talk about the bottom line. If you add the generation revenues and the storage revenues, now you start talking to something that is a significant revenue driver for the overall Tesla company. You've got $14 billion alone in, I'm sorry, I skipped to the next slide, but you got $14 billion alone in revenues for Tesla Energy, which is just going to skyrocket. So since I'm on the next slide, let's focus on this. This is basically just one example, I got two fingers up, one example of how production costs are going down. And there's a fear that there's going to be overcapacity, but let's just focus on what's on the slide. And this is from Morgan Stanley. So they're talking about ways that production costs could go down. You can change battery chemistry, for example. You can change the anodes, make them more dense. You could change the supply chain. You could do a lot of tweaks to bring down production costs. And you can see on the left side here, you've got production costs at 126 kilowatt hours going down rapidly to 77 in 2030. So I've included this in my projections, just so you're aware of that. I've included that production cost will go down. If I didn't do that, if I didn't show that, I should say average selling prices are going down, you would see the revenues much higher than what I projected. Okay, next. So I talked to you about how energy is small, but it's going to be a larger and larger proportion of Tesla. And here you can see visually how Tesla Energy is growing rapidly, and it's going to become a large part of Tesla. Now, what you don't see here is that when you value a company, you have to give different valuation metrics based on the type of division it is, the growth it is, the margins, the cash flow. So the EV car business to me is going to be a loss leader. It's going to be operating almost like what you studied in school when you took microeconomics, monopolistic competition, basically the marginal cost producer. You remember that? Basically, it's what I'm saying here. It's going to be like that the cars, the EVs from Tesla are going to be produced at the marginal cost. They're not going to make much money on it. So if they're not going to make much money on the EVs, then it means the value of the EV division is going to be worth much less than, for example, the robotaxi division, or in this case, the energy division. So let's make it into concrete terms. So for example, the EV division may only be worth less than one-time sales. Now, right now, I think Tesla's trading around 7 times sales, plus or minus 0.2. But the EV division may only be worth a fraction of that. I don't know how much, but if they pass on all their cost to, not to pass on their cost, if they don't charge any profit above their cost to consumers, that price to sales ratio for the EV car company, the EV division is going to be worth much less than generation. Now, if you look at generation, it's rapidly grown. It's set to be the most profitable division. So high free cash flow margin, right? So think about that. Rapidly grown, highly profitable, and it's going to be one of the largest market share companies in the world in this division. So it's going to be trading at a much, much higher price to sales ratio, perhaps as high as 8 or 9. So just remember that. So Tesla Energy is very important. Okay, next. Oh, here's another example, a visual example, how you could see how profitable Tesla Energy is compared to the Tesla EV or electric vehicle division. So here, Morgan Stanley says, Exhibit 2, that revenue from one megapack, remember, those are the storage battery packs, commercial ones. So one megapack is worth 35 cars in terms of revenues, but it's worth 100 cars. I think that's 100 cars compared for each megapack. So it's even. So not only is the revenue for one megapack big in terms of cars, in terms of revenue, that's pretty big, 35 cars. But it gets amplified even more in terms of profitability because you're moving from 35 cars for revenues to 100 cars for operating profit. And that's why I told you free cash flow for this division for energy is going to be high. Okay, next. So where could Tesla's stock price hit bottom? So what is it worth? Is it worth as much as Ferrari? No way. Ferrari trades like a French company, like Louis Vuitton, Hermès, right? Or Tiffany, right? It trades almost like a luxury goods company. So we cannot use Ferrari at 11 times price to sales. And if it did, you could see the blue bar chart says it would trade around $370 per share. So should it trade as much as a legacy automaker or a premium legacy automaker, like legacy automaker meaning General Motors, Stellantis, Ford, premium automaker, BMW, or should it trade like BYD? Well, if you remember, BYD also makes hybrids, so it's like a little bit of a mix of an EV and a legacy car maker. But BYD could be one to pick, but has a very low multiple compared to Tesla, which is kind of scary. But one thing about BYD, I do not trust them. Like, even though they've got autonomous and all this stuff going on, and they don't have any debt, I don't trust. I think that they were subsidized by the Chinese government. And there's a Hong Kong-based research analyst firm called GMT that uncovered that huge Evergrande issue, real estate bankruptcy. Before they went bankrupt, they uncovered, the scandal of debt. Well, they're saying that BYD is hiding debt and that they're doing a lot of financing of their suppliers and that they're not net debt zero. They're saying that they have $45 billion in debt. So maybe that's why BYD is so cheap in terms of the cars that they're selling. So I think the multiple would be different if it was not a Chinese company. So I'm not sure if we could use them. Now, a price of sales of 2 times is when Tesla hit bottom in November 2019. So maybe we could use that. Or I think the middle is good. We could use a SaaS company at grown 11%, which is about what Tesla is doing. So if a SaaS company or Tesla is growing about 7%, the price to sales multiple is about 7 times, which is where it is about now. So I think what can happen to Tesla, and I'm going to show you in the next slide, is that its price to sales ratio can fall below where it is now, from 7 times down to perhaps 2 to 3 times. It could have done that before, and BYD is a lower multiple, so just be careful of that. And this is my conclusion in the last slide is, speaking of lower, so the stock had a drawdown of 50%, and now as I was speaking, it rallied up because Kathy Wood spoke. I think it went up to $280. But basically, I still think if there's going to be a continued correction in this market, I think shares can go down from whatever it is, $280 a share, all the way down to $170 or $180 per share. Now, I like this for a few reasons. One reason I discussed earlier is that it would be at a much lower price to sales ratio. But another reason, which is almost as important, is technical analysis. There's a huge amount of support at this level, and I drew a line, that blue line. So if the stock goes down to that line, I think that's going to be enough to support it no matter what happens with car deliveries in the first quarter. So that's it, everyone. I hope you enjoyed this presentation. I hope you appreciate what Tesla is doing with Tesla Energy. And I would like you, I did many videos, but I would like you to focus on my robotaxi video because I think you could appreciate where Tesla is going from 2026 onward in terms of revenue growth and profitability. If you look at robotaxi and the subscription business of full self-driving, FSD, I think there's going to be a lot of opportunity there. So for right now, put on your seatbelts and hold on. And thank you for listening. And don't forget to hit that like button.